This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming out of a holiday, midweek holiday, but right into the last day of the week. This is, by the way, the end of the week. It's the end of the month, the end of the quarter, and the end of the half year as well. So, it's interesting in that sense, but perhaps has got some implications for, how funds behave, etc. We'll talk about that. We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, hi, morning.
Morning.
Hi, end of the month also means salary, right?
Wow,
I thought you would say that.
I thought you'll leave
You
it
can't
for me.
keep
But yeah, good to come out of a holiday and get into another holiday,
This
right?
trading day was pretty much sandwiched in the midst of two holidays, but salary comes in. And plus, I'm sure everyone's mutual fund portfolios are looking a lot better now with the kind of rally we put in.
Oh, absolutely, right? I mean, all-time high portfolios,
Yeah.
hopefully, for
Hopefully.
everyone.
I think the rains could give it a bit of a break on the weekend as well. It's been raining too much. So,
I want to say this again. As someone, I can't get over it. Someone said, I don't know why there is Saturday and Sunday. Market should be open because the 0.5% daily compounding is interrupted. I mean, that's how used to people have gotten to markets doing well. But let's just quickly run through what you need to know, right? So the Nifty on day before yesterday, that is Wednesday, closed above the all-time high, the previous all-time high of December 22 of 18,888. It also, by the way, got to 19,000 levels and kind of ended just under it. That's the point number one. So, I mean, we are basically coming in after a session where we saw strong momentum pick up once again. How are global cues? So you got 2 days worth of data to react to. That is Wednesday US and then last night. I mean, day before US session was nothing. I mean, S&P was absolutely unchanged. The Nasdaq was a little higher. So this is yesterday's change. S&P on your screen, the Nasdaq flat. So accounting for the prior day, Nasdaq perhaps will be slightly higher as well. The Russell 2000, the broader small cap US index, is up about 1.25%. So it's not as bad, the backdrop from the US. And why not, right? Data in the US is screaming hawkish. I mean, it's basically telling you that the economy is just in very good form. So we had upward revision to the first quarter GDP numbers, 2%. By the way, an economy that size, that's the revised number upwards for GDP. 2% is not recession, right? I mean, it's no way close to as many have been expecting for the last year or so. There is, of course, also the renewed drop in weekly jobless claims, which has kind of reversed the rise that we saw in the prior 2 weeks of data. And I think this is interesting. This basically suggests that the hawkish Fed policy, which we heard from, we got a pause, of course, which was kind of difficult to explain, but we got a pause. But after that, in commentary, we heard from Fed chair that there is more job to be done, and the data kind of reinforces that. We get core PCE numbers today, later out of the US. But unless that is something wildly different, I think we should go with what we already have. Now, market reaction, big rally in yields. The 2-year topped out at about 4.9%. I mean, it got to 4.9, that's the point. And then, of course, it cooled off a little bit. The 10-year was up 13 basis points to about 3.8. The dollar index is also up. It's up back above 103 levels. And for the last 2 days, by the way, the dollar index is creeping up 0.5%, 0.4%, and we are back above 103 levels. Now, let's just come to the levels here in terms of the market. The Nifty has resumed its higher top, higher bottom formation with what we've seen on Wednesday, beg your pardon. So that's good news. I mean, because we had a bit of a corrective move, which was very short-lived. And in 2 sessions, we seem to have reversed that. On the way up, the Nifty has resistance at 19,040 levels. And then the upper end of the rising channel stands at 19,190. So those are levels that I would like to project at this point in time. Before we move any further, you could look at Bollinger Bands, etc., and project even higher levels, but 19,040 and then 19,190 are the 2 levels on the upside. On the way down, the support which has worked consistently for the Nifty, has been the 20-day. That now stands at 18,704. Quite a bit of distance between where we left off day before and the 20-day now. The Nifty Bank, we pointed out on Wednesday morning that on Tuesday session, it had crossed the 20-day moving average. And then the momentum in the Bank Nifty has also picked up. On Wednesday, it crushed the previous high of 44,499, but it could not sustain above it. So that becomes the first level on the way up that you need to be mindful of. On the way down, the 20 and the 40 exponential day moving averages, the levels on your screen will be important to track. The SGX will come up on your screen. As we've been saying, SGX is up about 34, 35 points or so. Momentum is very, very strong. I mean, if you're trading, it always helps to get, the risk reward skewed in your favor. And the easiest way to do it is to buy slightly lower and not, chase the gap up in any way. The market's not showing a big gap up or anything, but that's the way to do it. Otherwise, I see really no problems with where the market is or where we are headed from here. Rima.
Absolutely right. The SGX Nifty is suggesting a 100-point gap up, currently closer to 19,200, which compares with Wednesday's future close of 19,080. So we are looking at a 100-point bump up. Just a quick word on the flows on Wednesday. The FIs have net bought more than 12,000 crore rupees. Yes, it does include the Adani block deal, the MSCI rebalancing, but still, it's a very large number. And with this, the FI inflows in this fiscal year have topped $10 billion. The DII outflow was just about 1,000 crore rupees. As we enter the July series, it's going to be a very important one. One, you've got the Q1 earnings season. You've got the auto sales. Let me begin with that. The auto sales start trickling in over the weekend. Then from next week, we've got the Q1 earnings season starting with Chalet, but it pretty much picks up from the second week of July. You've got to track the monsoon progress. It started off late, but it's picked up steam. But can it sustain? That's going to be watched closely. And the FOMC meeting is on the 25th and 26th of July. In other important news which came over the weekend, which spells good news for the asset management company, SEBI appears to have deferred its decision to rationalize the total expense ratio. They've said they will release a second consultation paper, and Madhvi Puri Buddh says the MF industry will be pleased to see the new TER draft regulations. So watch out for that. Secondly, the government has also given more time for implementation of the higher TCS rates, the tax collected at source on overseas spending, also the inclusion of credit card spends in LRS. So there is more time. This was a bit of a worry in terms of implementation for banks. So just ease of doing business, some steps which appear to boost the ease of doing business over the weekend.
Well, that's right. Rima, the trend is up.
Yeah.
But maybe booking some profits today at the start, if you get that big gap up, may not be such a bad idea. That's the call I think that I'm making today. Can the Nifty make it 4 straight sessions, 4 straight series that it ends higher? Well, time will tell. Remember, last 3 series we've ended higher. The last time we saw 3 straight positive series was in late 2021. That was in August, to October 2021 series. So out there we did pretty well. But can we make it 4 in a row? That's the question we're asking. And I've not seen 4 in a row, at least in the last couple of years or so. So let's see whether or not we can do that. In July, actually, in terms of a month-wise data, it's a favorable month. Because 8 out of the last 10 years, July has been positive. On an average, I've got a return of close to around 2.9% for the last 10 years on an average. And also in 2022, well, we had the best month in the month of July. So the seasonality factor or the data points are pointing that July is normally a good month. Let's see whether or not we get a good month this time around. How are the FIs positioned? Well, they're positioned on the long side. As I say, always we'll miss some of that short positioning because that was the start of the rally. When the FIs were totally net short, they were selling in the cash market and they got stuck on the wrong side. So for starters, at July series start, they're at around 66%. The net long positioning is close to around 56,000 contracts. So that's much higher than what we saw at the start of the June series itself. Even if we're looking at, the FI positioning and comparing it with the client positioning, clients would basically be HNI and retail. It seems now the clients, they're either hedging themselves or maybe they're not expecting the index to run away. Because now actually they're net short on the index. And we've seen in the past that they normally have been on the ball in comparison to the FIs. So the FIs, the net long positions are at around 56,000 contracts. That's the long minus the short. While the clients, well, they're short are more than the long. So the net short positioning is at around 32,000 contracts. The PCR as well has moved to the upper end of the range. Remember, it fluctuates in this band of around 0.7 to around 1.45. Now it's at the upper end of the band because the way put writing has taken place. 18,900, 19,000 put, massive open interest build-up. So in the near term, maybe the put writing has got a little bit too easy. The levels you're tracking on the downside, you need to stay long on this index. But the 20 DMA will become important both on the Nifty and the Nifty Bank. But given the fact that the dollar index is a little bit stronger, Brent crude prices have moved up a little bit, the PCR has moved to around 1.4, and also you have the FIs that are easily net long. I think if you get a gap up, take some money off the table, enjoy yourself, start the weekend early, drive to Lonavala, do whatever you want. But I think taking some money off the table at the start of today may not be such a bad idea.
You know, Nigel, what they say about taking money off, right? You got to make two decisions, three actually. You got to decide to take money off.
Decide what to
take the money off, and then you got to get back in.
Yeah.
But if you're trading, I mean, that's what you do.
Yeah,
right?
that's probably the call on the headline index.
So
I thought one of them will be what you do with the money.
No, you keep it because you got to get back in. All right. Well, let's just quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. Rupal Agarwal of Bernstein will join in to discuss the global trade setup. Our research team will get you CNBC TV18's list of top 10 stocks for the day. And 8:30 this morning, we have Gurmeet Chadda of Complete Circle Consultants joining in with a quick check on fundamentals and stocks that he likes.
On the equities then, Chris Wood of Jefferies says some changes will be made in the Asia ex-Japan and India long-only portfolio. The investment in JD.com will be removed and replaced by an investment in Baidu, while the investment in Zomato in the India long-only portfolio will be increased by 1 percentage point by shaving the investment in ONGC.
Okay, now this is Sanjeev Prasad of Kotak Institutional Equities who says that they struggle to find ideas in consumption, investment and outsourcing sectors after the sharp run-up in several of their favored sectors and stocks in the past 2 months. He says the BFSI sector is the only one that offers value, although even insurance stocks have rallied in the past few days. He says they've reduced their weight in certain consumer stocks after their strong recent performance of Britannia, Godrej Consumer and Titan. They're also trimming positions in banks and NBFCs and Interglobe Aviation to recommended large caps.
Let's get you some money market views then. Lakshmanan V of Federal Bank says throughout this week, the rupee has traded in a very narrow range around 82 against the dollar as volatility continues to remain subdued. He says the US has released a string of robust economic data, including a notable increase in US GDP, while the new home sales reached their highest level in a year. He adds that these data points align with the hawkish remarks made by Fed Chair Powell in Madrid, suggesting the likelihood of at least 2 more interest rate hikes, consequently bolstering the US dollar. Thus, he expects the USD INR to trade in a range of 81.68 to 82.35 against the dollar during the next few trading sessions.
Okay, on bonds, we have Lakshmanan V who says that domestic 10-year benchmark bond yield rates continue to stick to a very narrow range of 7 to 7.1%. He says near-term triggers are few and markets will be awaiting fresh cues in the form of US payrolls and inflation data early next month. He adds hawkish comments from Fed Chair Powell and robust data will keep the 10-year bond yield tilted higher for the next few sessions.